I want to talk to you about IRAs. Now, you've probably heard those letters a lot in your life, and I want to explain a little bit more about what an IRA is. First of all, it might surprise you to know or to hear that an IRA stands for Individual Retirement Arrangement. It's not account, and it's not annuity, but it's arrangement. And it's something that is in the tax code to encourage people to invest and save for retirement. So you can open up an account that is an IRA and put money into it, and it will save you on taxes. And that's the encouragement that the IRS gives you to, and the government gives you to save money for your retirement. Now, there's two different kinds of IRAs, and you've probably heard people talk about traditional IRAs, Roth IRAs. And so what's the difference between these two? Well, first of all, traditional was the original IRA. This is an IRA that when you put money into an IRA, it reduces your taxable income. So for example, let's say you're in the 22% tax bracket, which a lot of people are. That's if you're making over about $60,000 or $70,000 a year. Then you put $1,000 into an IRA, and you will save $220 in taxes. So in essence, putting in $1,000 will only cost you $780. That's a good deal, right? That sounds really good. So when you retire, then however many years that is, and you need that $1,000, that same $1,000 that you put in, you pull that out. Now the government wants their money, so they're going to tax you on it then. So let's say then taxes have gone up, which we all think they probably will in the future, and now it's 25%. So you take that out, and you have to pay $250 in taxes. So actually, that $1,000 now is only worth $750. Now, Roth IRA is sort of the opposite to this. When you put money into a Roth IRA, it doesn't reduce your taxable income. So you put $1,000 into it, and your taxes stay the same. But later, when you retire and you take that $1,000 out, you don't pay any taxes on it then either. So that $1,000 is worth $1,000. So let's give the scenario of $1 million. Now, all your investments over your 30 or 40 years, it's grown to $1 million. If it's in a traditional, that might only be worth $750,000. But the nice thing is, in a Roth IRA, that million is worth $1 million. You know exactly how much money you have. Doesn't matter what the tax rate is. Now, there's some other advantages to Roth IRAs that I want to talk about also. One of them, and I don't think many people know this, is that money that you put into a Roth IRA, you can take that out at any time, penalty-free, tax-free. You've already paid taxes on it. So if you put $1,000 in it, and let's say that $1,000 over 5 or 6 years, it grows to $1,500, you could take $1,000 out and you wouldn't pay any taxes or penalty. Now, if you went into the 500 of growth, you would pay taxes and penalty in most cases anyway. Another advantage of the Roth IRA is that if you don't want to, you can leave the money in that Roth IRA forever. And that may not sound like that big of a deal, but with a traditional IRA, when you reach the age of 72, the IRS says you have to withdraw a certain amount every year. For obvious reasons, you owe taxes on that money, and they don't get it until you pull it out. So there's a certain percentage you have to take out every year. And this is regardless of whether you need that money or not. But with a Roth IRA, you can leave it in there and pull it out when you need it, but there's never any requirement for pulling it out. So which is better? Well, I would say that the best thing is to have some of both. Because when you retire, you don't know what your tax rates are going to be. Nobody knows what they're going to be, especially if you're in your 30s, and that's still 30 years from now. Who knows what it'll be then. But if you have some of both, you can take some of it out to live on, but not so much that it pushes you into a higher tax bracket and then you can use your Roth IRA above that level. So my recommendation is you just put money into both over time if you can. And one other thing to add to this, the traditional and Roth also apply or might apply to your workplace 401k and 403b. But check with your employer to see if that's true or not.